Group risk insurance in our industry has been treated, I think, for many, many years as a commodity, perhaps, very much based on price, on free cover limits, and it's not really the right way to go. And I'm joined today by Mr. Abdur-Rehman Mangera, who's the head of group benefits at Bryte, to cast a bit of a reality spell onto what the real situation is and what it should be in an ideal world. Abdur, good afternoon.
Good afternoon. Thanks, Chris, for the introduction. Just from a price perspective, pricing, it is an important consideration. And likewise, your free cover limits. When you generally rebroke, those are two of the key factors that most would look at and make part of their purchasing agreements. But it's not the only consideration. And some of the things that people need to consider is that when you're purchasing group risk, it's a long-term commitment. And it's vital to ensure that the insurers that you select can provide you with adequate cover, not only for the members, but also from a reinsurance perspective. So your insurer's financial stability needs to be upheld and maintained. Effectively, price is one very small component, and particularly within group risk, as you may know, price and free cover limits become quite flexible. So it's something that's negotiated. Some of the things that we would look at is how do you get a market comparison, brokers do that, and most likely the incumbent gets an opportunity to match or maintain a rate. The tricky bit is how do you actually measure the other aspects of it? How do you measure credibility of the insurer? The credibility of the insurer is then looked at. How do you offer proper and adequate service? Can you actually pay your claims? How do you manage that? So it's not just keeping to an SLA. An SLA is just a guideline to say you can do it in X period. Ideally, we should be a service industry. And I think in this industry, price has become king about everything. And we have the misnomer about service. We probably one of the most slacking in terms of service as an industry. So you need to consider the ability of the insurer to be able to give you that service. From a price perspective, again, as I said, it's negotiable. So you can phone your actuaries or you can phone head of group benefits and you'll be able to get a response 24/7. But the real crux of it is, can you actually do your underwriting properly? Can you get hold of members that are above free cover limits at a time that's suitable for them? Can you do your medical underwriting timelessly and with convenience for a member? And I think that's the crux of it, is how do you actually get service? And maintaining service is one of the most or the least sought after from all the components that we actually look at. So you look at price and product. Service is one of the ones that are least looked at from all the insurers because it's assumed that everybody can do the same. The truth is, product-wise, is pretty much the easiest one to consider because everybody can offer similar products. And group risk is one of those that hasn't changed much. There has been nuances in the industry. So you've got tweaks to a benefit, but ultimately you're dealing with death and disability. And the ability to manage those two effectively makes it a lot easier for us to offer service and a product that gives credence. And like I said earlier, it's a long-term solution. It's not something that you want to do annually, which group risk generally is looked at on an annual basis, but it's a long-term commitment. You're committing to an insurer who's committing to you. And that's where you build a relationship. That's where you understand the requirements from an employer, from a broker, from a member. Ultimately, we don't get to the members. And if you look at from a knowledge perspective, the employees generally don't know what they're covered for. You just know you signed a document. When you joined the company, you had a contract and you covered for risk benefits. Who you covered with, the type of cover that you have, the price of it, you don't really know. And you don't pay attention to it because the focus generally is on retirement savings. So you look at retirement savings from the employee benefits perspective, everybody's talking about the two-part system, how that's going to be managed, how your investments are going to be upheld, what's the difference between onshore and offshore investing. But they don't look at the risk benefits. And given the mortality rates that we currently have, not a lot of people are going to reach retirement. And those that don't have sufficient money to retire well. But what happens when they pass on? What happens if they get disabled? And those are things that you need to consider prior to retirement. And it's one of the least focused on from brokers, from employers and members. So for me, it's not just the flexibility of price, it's the ability to actually offer a service and also educate people and give them an understanding what they're covered for and how it works. So you don't necessarily have to be the cheapest. You don't have to have a free cover limit that's exorbitant. You need to be able to assure a member that you're covered should an event occur. And that's ultimately what we have.
Right. I've got one or two questions and maybe an observation or two. You talk about the long-term nature of group risk insurance. And as you quite rightly said, that cycle has shortened to an annual basis. Now, it does not give an insurer like yourselves or anybody else an opportunity if, let's say, you just have the contract for a year and there was maybe a bad claims experience and you have to maybe increase your base rates on your insurance products, and now it gets taken away and placed with somebody else, and you never get the opportunity to form that long-term relationship and cross-subsidize between good and bad years. So that doesn't the sort of artificial churning, you use the word churning, in the sense that if one doesn't allow your insurers that opportunity to form that long-term cross-subsidization over a number of years, that opportunity, then it just sort of artificially kind of raises the bar of costs in the industry if you keep doing that and focus on price. Is that a correct observation?
I think so, Chris. From a employee benefits, if you claiming, and you got 2 or 3 claims that exceeded, COVID's a very good example of that. We had exorbitant claims, you had a large number of claims, and you've seen a knee-jerk reaction.
Yeah.
And the knee-jerk reaction is effectively what happens on an annual basis. So you increase your rates 30 and 40% because of this. Whereas if you had a long-term relationship and a commitment, so you had a good relationship with a broker, with an employer, you can actually maintain your rates or provide increases over an extended period. So instead of giving you 30% once off,
yes,
you can do a 5% over 10 years. So it gives everybody an ability to maintain and manage the risk a lot better. One of the, I think, the unintended consequences of moving business and chasing the cheapest rate is that eventually you get to a point where you're almost uninsurable, particularly on the larger funds. Because it's experience rated, you're looking at the history of the scheme, and almost everybody has the insight to look at it retrospectively. So you're looking at large schemes, eventually you keep on chasing the lowest rate. You get to a point where the lowest rates don't make sense. And from a customer perspective, you're now doubling and quadrupling your rates, whereas you could have maintained it over a longer period with smaller increases. And I think that also from a business perspective makes a lot more sense.
I'm with you.
Every business, irrespective of what you do financial planning, and your CFOs have to be able to say what's going to happen for next year. Whereas your group risk, if that continuously changes, you can't do 5-year projections, you can't do 10-year projections. And it's a huge chunk of your employee cost to company. And if those keep on changing by 20 and 30%, if you have a pandemic or you have unusual claim patterns, or an unfortunate incident that involves a number of members.
Right.
So you have an accidental death that happened with 3 people in the car. Your rates immediately go up and you can't manage those. And that becomes a very, very difficult thing for people to actually look at. So I think from a cost perspective, if you do it over an extended period, it makes a lot more sense financially for both the employer and the insurer, and you can plan things better.
Right.
And that's also from a negotiation perspective, it helps employers. If you look at affordability, you can manage your affordability. So instead of giving, it sounds like small amounts, but instead of a 7.5% increase, you can give a 7% increase because that's what they can manage. And you constantly do that means your increases are managed and cheaper going forward. If you look at the long-term effect, it does manage, give employers a lot better control over their finances.
Right, I understand. The other thing that also worries me on this fixation on price only is that, you also may overlook to your peril, things like inclusions, exclusions, free cover, not free cover limits, your pre-existing conditions. Not all insurers are alike. And if you're just focusing on the price and you neglect to look at some of these other finer detail, you may end up placing your business with somebody that, yes, you're paying a fantastic price for it, but you're not necessarily covered for what you think you're covered. Is that also a reality?
Yes, it is. And I mean, Bryte's also in insurance on the short-term side, and we've seen quite a bit of that come through with the floods and the riots in particular.
Right.
You don't think it would impact your life cover or your disabilities, but it does. In your terms and conditions, like your pre-ex, and particularly things that people don't generally focus on, your war and riot is a standard exclusion.
Right.
So if you look at the standard exclusion like war and riot, all the insurers have it, but you can partially waive it. So it goes into active and passive participation. There is a cost allocated to it, but in terms of policy, you can actually change that. So you can give a partial waiver. The thing is, when you're moving it and you're chasing the cheapest price, you're not looking, is that included or excluded? So given the riots that we had in KZN and the Western Cape, those are instances where people thought they were covered, but the reality was the policy, they never covered them. Yet they got a cheaper rate because the previous insurer may have reduced the benefit to take away a benefit as opposed to just reducing the price. So some of the other things that is being done, and I think you don't look at terms and conditions properly, is we've got things that are built into cover. So if you take your life cover and funeral, you have a repatriation benefit that's generally built in. In our case, we do separate the cost because you need to be able to show it explicitly because you don't know when and where it's been taken away.
Right.
And like you would say, terms and conditions make a massive difference in terms of price. And you don't know what you're covered for. And that's why your coverage with an insurer needs to be checked, not only against price, but also the terms and conditions and specifically the exclusions. So you need to know exactly what you're not covered for.
Yeah. I think so. Long story short, I mean, what my sense is, and what I'm getting from you is, one has to look at this comprehensively. Don't just, broad brush on a couple of minor issues and make that the all-important ones to look at. Look at it comprehensively. Include things like service levels. Include all these bits and pieces, and make a complete informed decision. Do a proper due diligence is really what I'm saying, instead of just focusing on one or two areas in specific. Is that a correct assertion?
Yeah, I think that's a correct assessment. It should be a proper way of doing it. When you do a proper comparison and you're almost doing a due diligence, as you say, on the company. So you need to be able to say, is the company financially stable? And a lot of the insurers, we do use either self-insurance or reinsurance. You need to be able to look at what's backing that up as well. So proper due diligence doesn't only give you the comfort that your claim is being paid, you also need to be able to look at service. And service varies from insurer to insurer, from reinsurer to reinsurer. So you need to be able to know, am I covered properly? are the tick boxes done effectively? So price is a consideration,
Sure.
but then you need to weight every aspect of it. So it's not just price, it's price, free cover limit, terms and conditions, exclusions, financial stability of the company. So do you have reinsurance, and do you also have a big brother backing you up? And those are the type of things that you need to consider when looking at group risk. It's not just price. It's a lot more than that.
100%. All right. Yeah, look, I think it's a fascinating topic. I don't think many people get that involved in it. And I think it's important to focus more attention on this because it is an integral part of the employee benefits package offering. And people tend to focus only on the retirement and very little on the group risk. And it's all fine and dandy until that time when you actually need that cover. Then it becomes all important. So I think a balanced approach is probably the right way to go, and to treat each component of your employee benefits package, your retirement component, your insured component, all of these with the right amount of attention and respect and due diligence that they require to ensure that you have a balanced, proper package, going forward. So yeah, interesting times. Abdur, thank you very much. I really think it was a very interesting chat, and I think people can certainly learn a lot from your experience in this field. So thank you very much. I really appreciate it. I'm really looking forward to having a future discussion on this going forward.
Thank you so much, Chris, for having me, and definitely looking forward to discussing the topic with yourself and others.
Thank you. All the best.
Thank you. Take care.